So welcome back folks to T2SMC Trader. This is the master class. I know that a lot of you actually struggling with the order block. In this video, I would love to make sure that order block concepts will be clear to all of you. Okay, I'll try my level best. So please make sure that you have watched from starting to until the end. At the same time, make sure that you have subscribed to our channel if you are new, and please leave a thumbs up in this video if you like it. Of course, let me know if you have any question to the comment box. This is just the introduction. I'd love to go from the beginning. So here I have to say you something. And first of all, in a market, as we are the intraday trader, we always see the bull setup and the bear setup. First, you have to decide what you are looking for and why you are looking for that. That means, are you bullish? Are you bearish? If you are bullish, then why you are bullish? Or you are bearish? What is the reason behind that bearishness? That is the most important thing for the new trader or the beginners actually, in my opinion, beginners who are struggling or starting to study the ICT. That is the most important thing. Why you are bullish, why you are bearish. You just can't go like in the chart and then look for the buy sell. No, you can't do that. You have to fix that. Are you bullish or are you bearish? So here I'll try to go from the beginning to the end by the price action from 29th of September 2025. I'll explain the price action from there from the beginning, so it'll be easier for you to understand how to look for the direction and why is that. How can you look for the perfect water block? I know a lot of you are like fascinated by the water block. Change in a state of delivery. What is that CISD? I will try my level best to make it clear. Okay. So here I'm using NQZ 2025, which is the future contracts Nasdaq, and here this is the weekly chart. So far you can see this is the bullish market, right? Absolutely, it's so bullish. This is the candle from weekly chart, and today's Tuesday actually the market just opened. There was only the Monday price action. So far this is bullish, so I'm not interested to look for sell. Of course I'm bullish, so I'll look for the buy. When I'll be in the lower time frame, it will be much more clear. So from the weekly chart, I would love to come to the daily chart. Here, this is the daily chart, as I do the live streaming almost every day. So all of you know actually what is this all marked, but those people who are watching this after so long, okay, maybe after 1 year, after 2 years, those people who are watching right now, they will first, you have to understand that what we are facing over here. This is the all-time high. That means market has built the all-time high. I have marked this three line, which I'm going to predict the all-time high, and then market will reverse. Okay, this is that those three lines. Here I have used the standard deviation. I'm not going to explain the standard deviation to this video because here solely I am focusing on the order block and the setup as basically, but where most of the things are coming from the order block. So here I'll just show you. This is the lines actually from the standard deviation where I have used this area to mark the standard deviation. This candle, the lowest body and the highest body. You see on my right hand side, this is minus 1.5 standard deviation. Above there is another line which is minus 2 standard deviation. And this is minus 2.5 standard deviation. So I am predicting this market will go any of these three line and then it will reverse from there. Okay, so as you can see, the body has closed above this line, which is minus 1.5 standard deviation. So I'm predicting this market will come at least to minus 2 standard deviation and then it will fall. If it can close above this line, then it will reach until this line, then it will reverse. Okay, so either way, I'm bullish. I'm not bearish until there it proves me wrong or it makes some kind of bearish fair value gap perfect thing. Okay, that will tell me that now you can think about the bearishness. So this is that three line you should focus over here to think why you are bullish, as well as ICT told when it is at the all-time high, you should keep looking for buy, no sell. You have to look for buy. You can see this market fall a bit here, trade that daily bullish fair value gap. Body has closed above the constant encroachment of that bullish fair value gap, as well as this is the discount week where this market actually traded the upper quadrant of that discount week. Okay, so after trading all of these things, you will, when I'll be in 50-minute chart, it will be much more clear what happened over here from the lower time frame. Brother, I don't know what is this. Brother, you have to join me. You have to join my live stream to understand all of these things. I'm not focusing over here. I'm more interested to focus on order block. But here I need to explain them so that you can understand why I'm bullish, why I'm bearish. Okay. So this all of this bullish PDRA, they are actually holding the market. And as this market is here, which is a random level to me, I'm not interested to see that this is going to fall and this is going for that liquidity level or nothing. I'm not interested to see. Instead, I would love to see it will reach at least until this line or that line. And then we'll see if it continue to go higher or it will have to reverse. Okay, so we'll see that later. Okay. So when I will be in lower time frame, you will be able to see this line, which is over here, this blue line. Remember, this minus 1.5 standard deviation. Now I would love to go to 15-minute chart directly because later I will come to 1 hour or 4 hour chart. It will be important later. Okay. This is the 15-minute time frame. This is my bellwether, and from the 15-minute chart, this is that minus 1.5 standard deviation you have seen over here. This is that minus 2 standard deviation. This was the all-time high, which is a relatively equal highs. If you take a closer look on that area, this is that relatively equal highs or the all-time high. Below this area, this is the first fair value gap, right? There is no other fair value gap above this fair value gap, which is intact. That means the body has 100% closed that fair value gap. There is nothing over there. Nothing, no fair value gap over there. I called this gap as a last fair value gap when this market fall and then later come back again here. This is called the last fair value gap. It's a very strong fair value gap. Even if I'm bullish, this fair value gap has the power to stop the market and send it lower to take some liquidity or maybe for the reversal to go for much more lower. Okay, it has that type of strongness or power. It is called, I called it actually the last fair value gap. As you can see here, this market has tapped to this last fair value gap, then it started to fall. Can I use this gap again? 100% I can do that. Until the body doesn't close 100% of this gap, not once, maybe twice, thrice. Until that time, I will keep using this gap as my last fair value gap. So remember, because on my right hand side, you can see, you'll be able to see this is the 50-minute gap, but remember this is that last fair value gap. I would love to start from a bit earlier, before the yesterday's price action. I have to talk about here as well. Okay. At the same time, you will see that this market came here, another 15-minute last fair value gap, a very specific thing. Another 15-minute last fair value gap to that specific leg. You can see from here to here, which actually traded the also another gap over there from the hourly chart. And this is the breaker block. All of this thing has traded, and you can see from here to until there, from there to there, right? There is no other low. This is the low. I'm not interested here because market didn't break this last fair value gap. The same kind of last fair value gap here, below the liquidity level. The same kind of fair value gap over here, which is above the liquidity level. This low, look over here, that low. I didn't just mark it. This low and that low. They're the relatively equal lows or the sell side liquidity. Above this sell side liquidity, this is the last fair value gap to that specific leg. This is that same last fair value gap. What do you see? Market actually fall, came until this last fair value gap from the 15-minute chart, and then this market reverse again, right? As my bias is bullish, this is that lower, I mean, sorry, the lower discount week, daily discount week. Let me show you one more time. From the daily discount week, right here. This is that daily discount week, upper quadrant of that daily discount week. From 15-minute chart, this is that same quadrant level over here. From the daily chart as well as the 50-minute last fair value gap. Very specific fair value gap, no confusion, nothing. Above the liquidity, this is the last fair value gap. There was no other fair value gap below this fair value gap. After building the liquidity, it has made the first fair value gap, while later this market came, it has become the last fair value gap. Came to the last fair value gap, consolidate a bit here, finally took the liquidity, did the SMT, which is smart money divergence, with the ES. Here is the SMT, that means this low has cleared over here by Nasdaq. This low failed to clear by here by the ES, which is mini S&P, in other word ES. We had the SMT or smart money divergence over here. Market started to go higher. Another last gap you can see here. I wanted to see it will be unfilled. There is another gap which I called actually the entry fair value gap. Not interested to explain it. The entry, what is the entry fair value gap? Because I have a different video on my playlist. You can watch the last fair value gap, entry fair value gap, everything you can actually study from there. This is that entry gap. Market has traded that entry gap. Order block, which is my main interest actually for making this video. Trade that order block. Then, wow, what a run. Where did it came? Exactly to the 50-minute last fair value gap. Then it has fallen. Again, reacted from there. Still, I'm bullish, of course, and we'll talk about this after a bit. But first, let's start from that area, from this area, okay? Because this video actually depended from the order block, where I'm trying to explain the order block more beautifully. Here, I'm going to specifically around this area, okay? So I would love to use the replay mode so that I don't need to go here and there. It will be easier for me to come when I will switch it from 15-minute chart to 1-minute chart. I'll be exactly over here. I'm coming in 1-minute chart. 1-minute chart, you can see here from the 15-minute chart. Don't forget about that. This is the last down close body close candle right here. This is that last down close body close candle, which is called the order block. In another word, it is called change in state of delivery. Now, here is a problem actually to me, and that is I don't like to mark this type of candle as my change in state of delivery. Are they? Of course they are. But I don't like it. Why? Because it has a very small body and a very long wick. So if you compare the wick with the body, you'll be able to see that the body is smaller, the wick are bigger. So I don't like this type of candles to mark as my change in state of delivery. And if you look the previous candle actually, which is not the lowest down close body close candle, but this is the consecutive candle. Here is another thing. This consecutive candle, I'm going to show a lot of example later, but first you have to understand this fact. These consecutive candles are the order block. Why? Because this candle has closed both of above both of these candles. If I mark a line here to the top of this line and extend it to my right, you will be able to see that this specific bull candle, after trading a very certain fair value gap, you know that I'm bullish because this is a bullish market. After trading this specific last fair value gap as well as the upper quadrant, this is the lowest down close body close candle, which is an indecisive candle to my opinion, in my opinion. But here I have the consecutive candle, and more specifically, the next candle actually closed above both of these candle. So these two candle is now going to be my order block. I would love to mark it as my order block, as a consecutive order block. Please don't get confused. I have just started this video. Later you will see a lot of other explanation and everything will be clear to you. This consecutive order block has been validated by this specific candle while it has closed above this candle. Then the next candle, trade that order block. I'm more interested to take the buy to the top of this candle. So here, from there, stop loss has to be 2 tick, at least 2 tick below this order block. See this order block, it has to be below this order block. I love to take the partial around 20 handle. I love to do that actually, or at least 1:1. At least 1:1. Take the partial over there and then hold your trade as long as you want. Okay, so here you can see it came actually until here, which is near about 70 handle to that specific area. So maybe you will be able to catch some of this run to this order block from that order block. I hope the point is clear why I'm marking them as a change in state of delivery. First of all, from the weekly chart, you have seen I was extremely bullish. Secondly, it has traded the discount week, the quadrant level, as well as the daily bullish fair value gap, as well as the 15-minute last fair value gap. It reached over here, made the consecutive order block. That means two candle has been built as an order block over here. Please don't get confused. I'm going to explain that everything is going to be clear to you. So here, this is that consecutive order block. Trade that order block, went higher, gave you the profit. As you can see here, this market actually left the liquidity on its left. So if you take closer look here, this is the relatively equal lows. I always love to mark relatively equal highs or relatively equal lows as my liquidity. So here you'll be able to see this is the consecutive, relatively equal highs. Here is relatively equal highs. Then you have the relatively equal highs over there. Very clean relatively equal highs over here. Maybe you have some relatively equal highs over there as well. Okay, relatively equal highs over there. I don't need all of them to mark right now. Just focus over here. This is relatively equal highs. I'm just going to remove it. Instead, I would love to keep this relatively equal highs over there. Is the liquidity has been taken after trading this order block? No, it didn't. Then this market has fallen, came back again inside this order block. Here, this is actually the place where you can look for new order block, or it is called actually the propulsion block. I'm not going to use that term propulsion block because here a lot of other things actually you have to think, you have to understand about the propulsion block. So I'm not going to use that term. Instead of that, I'm going to use the order block terms over here. Okay. This is the lowest down close body close candle, which is also traded here, the upper quadrant level. Didn't trade this last parabolic gap. I don't need it. I don't need this candle to trade this last parabolic gap. All I would love to see, did the lowest down close candle until another candle close above the lowest down close candle. Remember, this was not my order block. This was not my order block. This was not my order block. Until another body close above the down close candle, it's not going to be the order block. Here, finally, the body has closed above this candle. It has been built as an order block. If you look over here, this candle failed to go below that order block. So still, this is also valid as an order block. That means if I don't get an opportunity to take an entry from this order block for the first time, I would love to try to take re-entry from the next time. If you take a closer look over here around this area, I would love to mark another line from this candle high. This is the lowest down close body close candle which has traded that consecutive order block and failed to go below this order block. When this candle has built as an order block, when the candle, the next bull candle here, it has closed above this candle, then it has been validated as an order block. Remember, until the body doesn't close, this candle didn't close above this line. Here, fortunately, the very first bullish candle has closed above the consecutive candle. So it has been validated as an order block. But here, look, the very next candle didn't close above this candle or above the consecutive candle. But this candle has closed above this candle. So it's been now my order block. Here I have used the consecutive candle. Here I'm going to use just one candle. Why? Because the bullish candle has closed above this candle. For example, this candle didn't close above this candle. Instead of closing above this candle, it actually closed above that candle. Then I wouldn't mark that candle as my order block. I would mark both of this candle as my consecutive order block. Fortunately, here you can see this candle specifically closed above this lowest down close candle. Which candle? I'm going to refer this candle as my order block from that order block. First of all, it has been built over here as an order block. Later, this market came back again inside this order block, validate this as an order block over there. Look at this very next candle. This candle open, tap to this order block. I am interested to take the buy here. Going to mark it as an order block. Remember, I'm not going to use the term propulsion block because to understand the propulsion block, you need more other knowledge. Here, I'm just specifically going to focus on order block. This is another order block. Stop loss, same kind of, just 2 tick below that order block level. Okay. And same, you will take some kind of partial around 1:1, which is here 1:1. And then you can hold your trade as long as you want. And in this type of situation, maybe you will be able to hold the trade until the liquidity level. Here, maybe if you would love to take hold the trade by trailing the stop loss, you will get stopped out. But this time you are not going to get stopped out. And instead of that, you are going to get your full boom at least until here, which is near about 190 handle. Even if you don't need that on, you can hold this to 1 minute last parabolic gap over here below the liquidity. You can hold it until here, which is near about 100 handle. Okay, something like that. So this is a order block. which is called change in state of delivery. First, you have to understand what is your bias. Look, I'm not showing you the bearish order block. I'm showing you the bullish order block. I have decided from my weekly chart, daily chart, this is a bullish market. So all the fall, maybe there is a order block, maybe there is a order block, maybe there is a order block. All the fall, I don't care because my bias is bullish. I'm interested to look for buy only. At the same time, we have framed the same trade to my live, but not from the order block. I have showed you the entry from this order block. Actually, we took the entry from this order block, and then we have taken the entry from the 22 YT model, which is called ICT's 2022 YT mentorship actually, or YouTube mentorship. We called it 22 YT model. So later when I will go and talk about the 22 YT model. Don't get confused. That is ICT's 2022 mentorship. Market has cleared the sell side liquidity over here. You can see this swing low has been cleared. We have outlined or we have framed this trade in live. It has cleared the liquidity. Market structure shift. There was the fair value gap over here. You can see there is the fair value gap. So we actually took the entry from that fair value gap, which is actually here. Stop loss has to be below this low, which has cleared the liquidity. See here, cleared the liquidity. Can you see? We are actually covering the order block low, by the way. And after taking 1:1 partial, wherever it is, you can hold your trade as long as you want. That is the trade actually we have framed over here, according to 22 YT model. Until now, I believe that you have got an idea about the order block, how to mark consecutive order block, how to mark a single order block, how can I mark a later order block if I miss, if there is a logic. Okay, so far you have got an idea about the order block. Now I'm going to back to 15-minute chart, going to close this one so that I can show you the next example. Look over here, while this market has cleared the liquidity from 1-minute chart, it came exactly over there, right? Around this area. While this market came to this 15-minute last fair value gap, where I have shown you the order block. Still, what is my bias? Bullish. I'm not bearish, so I'm not going to frame any kind of bearish setup. I am extremely bullish, so I will look for the buy run only. Now I would love to show you something from 15-minute chart. What did I show you so far? From 1-minute chart and 15-minute fair value gap. Remember, that was the 15-minute bullish fair value gap. I have used two time frame. One is 15-minute chart, another one is 1-minute chart. So I called this order block or the change in state of delivery as a two time frame order block. So later when I will say two time frame order block, you will understand that 1 minute down close body close candle or up close body close candle has traded another time frame fair value gap. The fair value gap is not from the same time frame. Okay, but look over here, the lowest down close body close candle. What is that called? From the 15-minute chart, same time frame order block. That is that very specific candle which has closed above this down close body close candle has been built as an order block. Extend it to your right, and you will see how beautifully this order block has been. It hold the market, and then finally this market sent here to that 50-minute last fair value gap. Remember, every day my bias is bullish. So I'm going to give you the bullish setup only. Even the market is bearish, I don't care. I will get the bullish setup from these order block concepts. Okay. So now try to understand this fact. This is that 15-minute bullish fair value gap or the last fair value gap that has been traded. Market went higher. When it went higher, it left two bullish fair value gap from 15-minute chart. I'm going to mark them. First bullish fair value gap is over here. I know guys, those are with me with our live streaming. I have explained this to our live, but I'm making this word block video so that later, after maybe 1 year, 2 year, 5 year, the people will come and watch this video. They were not with me in my life, so they don't know how we did it. Okay, just for them I'm making this video. Please don't get bored, revise whatever I told you in live. I'm just making the same video over here, so just revise it. Okay, at the end of the day I will actually explain today's price action. That's for you guys. Okay, so just revise over here whatever you have already listened from me, and then when I will count yesterday's price action, which is 29th of September 2025, you will get more valuable information over there. So there is a fair value gap, which is called a bullish fair value gap. I called it entry fair value gap. Don't get confused. I explained that entry fair value gap, and this is another last fair value gap. As my bias is bullish, first of all, try to understand this market has fallen a lot from here to here. It has fallen a lot. Finally, it has traded some kind of bullish period, and I'm expecting this market is going now for the all-time high. I need some kind of confirmation. What is that confirmation? That this market is going to leave some fair value gap open. It has to left the fair value gap open. So after trading this last fair value gap, if I find two gap, I would love to expect the first gap will be traded. The next gap is not going to be touched. So here, where I'm trying to explain you the order block 22YT model, as well as you are going to learn something to understand the market. So this is that fair value gap. I want to see it. Market will not touch this market. Even if it touch it, it will trade the upper portion or the top of this gap, then it will start to go higher. If this market would love to fall, it can maximum fall until the constant crossment of this gap, but some portion of this gap has to be open. Now as you can see, this candle actually finally closed this one, so I'm not extremely bullish yet because market has closed this gap 100%. But before closing that, when I'm seeing, so I'm now going to use the replay mode again for your understanding. Okay, so let me actually use it from there. Okay, that area. So when for the first time this market has built this bullish fair value gap, what is my expectation? I'm expecting this market is going for the all-time high, and it is going to leave the lower fair value gap absolutely open. Absolutely open. It should not even touch this gap. It will trade the upper gap, which is called the entry gap. After trading this gap, it will keep going higher. I would love to see that. Now I'm coming to 1 minute chart, and if I come to the 1 minute chart, where is that area actually? Actually, this is that area. Let me actually go to 15 minute chart one more time, because it's not showing in 1 minute chart, so I have to actually make it visible on 1 minute chart. So now it will be visible on 1 minute chart. So now I'm in 1 minute chart. What is my expectation? This market is not going to fall for this gap. Instead of that, it will trade this gap and then it will keep going higher. That is my expectation. Remember that. Now, while I'm expecting that, do I have any other liquidity? Because market has cleared this liquidity over here. Do I have any other liquidity? 100% I have the liquidity. As the market is going for the all-time high, man, you can see clean highs over there. You have clean highs over here. Okay, lot of highs over there. You have clean highs over there, and the all-time high actually. You have lot of highs over there. So you have a lot of bullish fair value. I mean, buy side liquidity. So far I have this clean highs, which is my buy side liquidity, where I'm going to respect, or I'm going to expect that this market is going to take that buy side liquidity. Market has beat this bullish fair value gap. Excuse me. I'm going to show you same magic from the water block. So this is that market, and finally this market has came to this fair value gap. Do I have the water block over here? No, I don't have the water block. Why I don't have the water block? First of all, this market didn't close above any kind of candle. Okay, this candle can't be the order block. Why? Because this candle has a very small body, a very long wick comparing with the body, so it can't be the order block. As well as the body even didn't close above the down close body close candle, so I can't mark any kind of order block. So let me show you step by step, and then this market actually went a bit higher. I am not interested to mark it as my order block. Remember that it's not a valid order block. Even though the body has closed above this candle, I'm not going to mark it as my order block. The reason is small body, long wick. So finally, this market came here, and you can see this market went a bit higher, and finally it has closed. It has closed above the consecutive candles. So first, I'm going to mark this candle high, and then I'm going to mark that candle high, both of this candle high. Okay. Look, this candle has closed here, didn't close above this candle. The very next candle has closed above this candle, as well as this candle has closed above this candle. So what I have to do? I have to mark this consecutive candle as my order block. I can't use the lowest candle as my order block. Of course, this is the most sensitive candle which can work as an order block, but I have to mark the consecutive order block or the two candle as my order block. So this is my order block. Now here is in fact. You remember the first time we have found the order block here and we actually got the entry opportunity over here. So we don't need to wait for that candle as my order block because we have found the entry over here, right? This candle closed and then it just gave me the entry, went higher. So I'm able to enter from this order block. But what happened over here? Look at this. This is that candle that didn't trade over here. I look for the immediate reaction. What is immediate reaction? Within three candle, this market has to trade the PD array. I'm expecting it will trade and then it will go higher or it will go lower. I called it immediate reaction. Even if it doesn't trade that PD array within three candle or the look this, I'm calling this as my PD array. Okay, within three candle, if it doesn't trade that one, I will look for maximum five candle. So maximum five candle is valid to take the entry. If it takes more than five candle, no, that entry is not valid anymore. So you can see the candle actually came to this order block here. One, after building the order block, that is the candle which has made this as a valid order block. 1, 2, 3, 4, 5. So within 5 candle, it didn't come to this order block. I can't use this order block to take my entry anymore. So I have to look for another opportunity to see if it can provide me any kind of entry opportunity. So in that type of situation, I am more interested to see this low. It should not be taken. If this low is taken, I'm not interested to take another order block entry over here. So let's see what happened. Finally this market came here. I'm not interested to look for any kind of order block yet. Why? It came inside this order block. I'm watching this order block now. It came inside this order block, but nobody has closed above the down close body close candle. So you can see this market fall a bit and finally came here around this area, didn't clear this low. If this low is cleared, no order block is valid. No order block is valid. Okay, still now I don't have the order block opportunity. No opportunity, still no opportunity. And then finally this is that candle. Let me actually put it here so that it will be easier for you. This is that candle that has closed above the order block. Same kind of logic here. Lowest down close body close candle. This is that order block level. Okay, here. And I'm going to mark this candle as well. Why? It will be clear absolutely by here. Look where the candle has closed above these two candles. So I can't use this candle as my order block anymore. I have to use this candle as my order block. I'm going to mark it as my order block. And you can see here I have some kind of relatively equal highs around this area. You can see around here relatively equal highs. So I'm going to mark it because I don't need 1000 handle by one entry opportunity. I know what I'm doing. You are going to learn it as well, what you are doing after watching this order block video. Okay, so this is the consecutive order block. When this candle has closed above this consecutive order block, I'm interested to take the buy from here. Stop loss is going to be 2 tick. Remember, 2 tick below the down close body close candle, not below this swing low, below the down close body close candle, at least 2 tick. Now if you put it here, I have no problem. I don't have any problem, but according to the logic, you have to put the stop loss at least 2 tick below the lowest down close body close candle. Same thing, stop loss, or sorry, the partial at least 1:1, which is here. 22 handle and 2 tick is my stop loss, so I have to take partial around 22 handle 2 tick, and then you can hold your trade until here, and if it give you the entry within maximum 5 candle, best is 3 candle, but maximum 5 candle. So let's see what happened. The very next candle has given you the entry, so that should be your entry, right? The very next candle, very immediate reaction. Let's see if it has given you the actually the partial as well as the full target over here, right? Full target, you got the boom over here. What I have used, the same logic I have shown you here. What I have done, I have just used the logic to take the buy. Look here, maybe there is a bearish order block, right? Market has traded that bearish order block, then fall. I'm not interested to mark that order block. Maybe this is the highest up close body close candle which has traded some kind of bearish parabolic gap from 15-minute chart. Let me go to the 15-minute chart one more time. So here, this is that 15-minute chart, and as you can see here, this is that area I was talking from the 1-minute chart. You can see it has traded a very specific 15-minute last parabolic gap, right? I'm going to mark that last parabolic gap one more time. Here, this is that last parabolic gap. Going to 1 minute chart one more time. See, that is that last parabolic gap. Same logic. Last parabolic gap. Here, I showed you why I'm not interested to see this is going to be traded because it should trade this one. That is the last parabolic gap from the 15-minute chart below the buy side liquidity. Market came to this last parabolic gap, the highest up close body close candle or this candle. Look at that candle. It has closed below this consecutive bearish order block over here. This is that consecutive bearish order block. So I'm not talking about. I'm not. Just look over here. 1, 2, 3, 4, 5. Within 5 candle, you have got the opportunity to take the sell from there, right? Exactly from the same logic. Stop loss is going to be 2 tick above the consecutive order block, and maybe there is some kind of sell side liquidity that you are going to target. Your stop loss, or sorry, partial will be honest one, which is 1750, or maybe you can hold it for 20 handle, and then you can hold the trade until here, which is kind of 56 handle. Focus over here. I'm not showing you this cell. This cell is not valid to me. Even though the same logic I have used here to mark the order block, perfectly it has worked over here, but I'm not showing this to you. Why? First, you have to focus on your bias. What is your bias? Bullish, look for the bull run. Bearish, look for the bear run. If your bias is bearish, then you are not going to frame the bull setup from the order block. Instead of that, you are going to frame the bear setup because your bias is bearish. Depending on your logic, here my logic was bullish, so I was actually interested to look for buy only. I didn't frame this sell because this is not logical to me. I'm not interested to take this sell, even though it was a valid 20. I mean, sorry, bearish order block, but I'm not interested to go for that one. It is very important, guys. So if you avoid or ignore this point or that area where I'm saying that whatever your bias is, you will look for only toward your bias. So you will look for the order block toward your bias only. Bias only. Okay. Don't go like zigzag. Sell, buy, sell, buy, sell, buy, sell, buy. Don't do that. So here, that is the order block. I hope this is clear to you. So if you look this incident over here where we had this order block and that order block, the same logic over here, that was the order block as well, and perfectly gave you both entry from the both order block. Why I'm not interested to take the entry from this order block? Because that order block has given me the entry opportunity, so I'm not interested to use this order block. Here you can see the first order block, or the first time the opportunity I didn't get the opportunity. So the next time it has provided me the opportunity, I'm more interested to go for that trade. Okay. So I hope this this area is absolutely clear to you. So I'm going to go to the 15-minute chart. From the 15-minute chart, I'm going to cancel this replay mode. I have shown you the price action over here around this area. Then this market came here around that area. I'm interested to show you something here. So what I was looking for, I was looking for buy only, no sell. As well as I wanted to see this board, this gap will be traded. This market will never trade this one. Even if it trade, it should not close below this gap. It has to leave some gap open. What happened here? Actually, what happened? You can see that this market has perfectly closed this gap. 100% this gap is closed. Okay. So start new, and I'm going to use this area so that you can understand that from 1 minute chart what happened over there. So this is that same fair value gap I was talking over there. Even when this market has closed below this gap, I'm not interested to look for any kind of buy anymore. No buy is valid to me. Why? First of all, I wanted to see this will be unfilled, but it has filled 100%. So I'm not interested to look for any kind of buy anymore until the 15-minute candle close above this fair value gap again. If I go to 15-minute chart, you can see this is that specific candle, which is 215 candle that has closed above this fair value gap again. So I'm now good to go for any kind of buy. So this 215 candle or 1415 candle from the 1 minute chart, 1429 candle. So I mean 1 minute chart, 1429-minute candle. Okay, so here this is that 1429-minute candle from 15-minute chart. When this candle closed, I have found that okay, finally the 15-minute candle has closed above this bullish fair value gap. Now I'm good to go for buy again. Until here, all of this price action, I can't use it as my buy setup or anything over here. Looks the same logic over here. This candle has closed above this consecutive candle. Look, all of these three candle, right? It has closed above here. If you look on your left, it has traded same 1 minute last fair value gap. This is called the same time frame order block. I have shown you two time frame order block. Of course, I will give you the example from the same time frame order block, but just look over here. This is two time frame order block, two time frame order block. It has been built from the same time frame order block, from the same logic, the last fair value gap above this candle or to that specific leg. That was the first gap. Finally this market came here to trade this gap, and then it has built the same consecutive order block. Look, this candle didn't close any of this candle, but the next candle has closed above all of these three candle, one, two, three. So now it is called the consecutive order block. Here I have to mark three candle, not 5, 7, 8 candle, just three candle. This candle has closed. The very next candle, tap to this order block. You are going to take the buy from there. Stop loss same below that order block, to tick below this order block. You will take some partial around 1:1, and then you will hold it. No, it's not valid. Why? The higher time frame is important. I am expecting something that this gap is not going to be closed 100%. So I'm not interested to use this order block over here. Without context, this concept doesn't have any value. You have to have some kind of context first. 229 candle finally has closed. This is that candle actually. Finally has closed above the 15-minute last parabolic gap, which I wanted to see unfilled. When it has been filled 100%, I'm not expecting this is going to go for the all-time high dramatically. Instead of that, I'm expecting it will be a very small run, okay, small range. It's not going so far, or it's not going here and there so beautiful or so fast. It's not doing that. Instead of that, it's gonna spend a bit time here. Okay, not too fast, too extremely bullish, nothing like that. It will spend a lot of time over there, then it will go higher. Okay, so now I'm coming in 1 minute chart. After this candle, look at the same logic. No confusion, nothing, nothing. All of these candles you are going to ignore. Why? Because these candles, we are not supply and demand trader. We are ICT trader. So we cut through the candle. All of these candles doesn't have any value to me. I didn't want to see it will be closed. It has been closed. Now it has proved that market is not extremely bullish. Instead of that, it is bullish, but not like extremely. So you are good to go for any kind of buy from the same logic I have used here to that specific gap. Remember that specific gap. At the same time, if you look over here, when it tapped to this area, around that area, okay, now look very closely over here. This is that candle which is small body, long wick. After that candle, here is a bull candle, so that you can understand that I'm not cherry picking. So here it works, so I'm showing it to you. It's not cherry picking. I'm showing you everything. Small body, long wick. Even though this candle has closed above this candle, it's not consecutive order block. Why? In between this candle and that candle, there is a bull candle. So you can't say that this is consecutive candle. You can't use it like that way. So you have to use just the lowest down close body close candle, where this candle has, I mean, closed above this candle. For example, maybe this candle is valid as an order block. 1, 2, 3, 4, 5. Within 5 candle, it didn't give you the buying opportunity. So where it came later, it never make another order block before taking this low. Either way, this is not the order block. When it first came to this last parabolic gap, it never gave you the opportunity to take the buy from here, from there. Finally, it has been built a order block here, which is not valid. Why is not valid? Because the candle you are going to mark as in a order block, it has to be the high of that candle has to be the same high of the gap you are using to mark it as an order block, or above the high of that gap you are using to mark your order block. It is very confusing, right? So let me talk about that first. Here, this is that 15-minute gap. I'm using this gap as my gap to mark my order block. So the order block high, right? This is the high. Why this is the high? I have already explained that. This high has to be exactly the same high of this fair value gap, or above this fair value gap. In this specific case of scenario, you can see this high is above the high. of that 15-minute bullish fair value gap above that high. So there is no confusion. But this high can't be below the high of the fair value gap you are using to mark as your order block. Look over here. I'm using this area to mark my order block, right? I'm using this area. This is the high, consecutive order block high. If this candle, for example, this candle didn't close above this high, instead of that, it has just closed above this high, just above that high. I can't use this high or this candle as my order block. Why? Because this high is below the high of the fair value gap I'm using to mark my order block. So it has to be exactly to the line of the high, exactly to the line, tick by tick or above that line. Okay. So this is an important things to understand the order block. Just remember that as well. So of course, well, this candle has appeared over here and validated as an order block. It's not valid. Why? Because this candle high is below the high of the fair value gap. There was not even a single opportunity to take the buy from that fair value gap until here. So I'm not cherry picking. I'm showing you the price action. I'm showing you the algorithm. Finally, the 15-minute candle from the 15-minute chart, it has closed above this fair value gap. Finally, now I'm good to go for buy. No restriction. My bias is bullish, no restriction. Until it doesn't close above this gap, I can't look for any kind of buy. So the buy or order block I showed you from 1 minute chart here, it's not valid because it can keep falling. I don't know, it will keep falling or it will go higher. So I don't want to take the risk over here. Now from 1 minute chart, if you look over here, lowest down close body close candle, I'm going to mark it and extend it to my right. Where is the candle that has come finally validate this one as an order block? Lowest down close body close candle. Don't forget about that. This is that candle, right? Which has closed above this lowest down close body close candle. I don't need to mark the consecutive candle because I have already found a candle close above the lowest down close body close candle. If you compare the wick and wick and the body, you can see that it's not something like this type of candle or it's not something like this type of candle because the wick is much more smaller or the maybe around the same area. It's not indecisive candle. This candle close, next candle trade the order block. I'm interested to take the buy from that order block. Stop loss is going to be 2 tick below this order block, just 2 tick below this order block. Same kind of situation. I'll take 1:1. Actually, I don't support actually less than 20 handle. So 20 handle partial, and then I will look for the buy side liquidity. You can see here from 1 minute chart a very clean buy side liquidity, right? Relatively equal highs over there. What a nice buy side liquidity. So I would love to hold to the trade until that buy side liquidity over here, and maybe later it has actually trade. Let me check actually if it went higher or not. And okay, it takes actually too long, but whatever, maybe in the meantime you will get stopped out by trailing the stop loss or whatever it is. You will be profitable over here after clearing the partial. You have to trail the stop loss to the break even, and later if it actually hit your target or not, will that is not the fact. I don't really care about that. So over here, this is that same guys kind of situation. I'm not interested to go through all of this area because here we have a lot of that type of order block situation. Here the same kind of situation from the same kind of logic. After I showed you this logic, there has been the same logic. Two pair value gap, one is there, one is there, and another one is here. You can see there is another gap. Same logic. I don't want to see this gap will be touched. Market will trade this gap and it will keep going higher. If you go to your 1 minute chart, just by okay, continue. Okay, if you come to 1 minute chart and if you see this is that gap, I'm showing you the same gap over here. Okay, this is the first time market came to this 1 minute, sorry, 15-minute gap. Same logic. I don't want to see market should touch this gap. So this is that candle that has closed above this candle, which is valid as an order block. You can just take an entry from that order block, actually from this order block. You can take the entry from this order block level on your right there. That should be the entry. I have already explained this to my actually to my channel. You can take some kind of partial around 20 handle, hold your trade until this area, until that buy side liquidity, and you can see market actually went until that area. I mean, and it came here. Finally it come back again inside this order block. What I should look for, the low should not be taken, okay? Without taking this low, if it build another order block, that is also valid as an order block. As you can see here, this is that candle that has been validated as an order block. There is another order block opportunity. Why is that order block? Because this market failed to clear this low, okay? So I have to count the five candle. Within five candle, it has given me the order block entry opportunity, and I will take that entry from there, and the stop loss will be below this low. Same kind of target, because this buy side liquidity is still intact over here. And you can see here, one, two, three, four. Within four candle, I got the entry opportunity from this order block as well. What man, you will be just fascinated, okay, by this order block if you can understand this logic. And you can see finally this market gave you the boom, both from this setup and both from that order block. Same logic I showed you, the logic here, here, before there. Lot of time. How many times do you want to go? Let me show you this another one, okay? So if you cancel this one, same logic over here. Finally this gap has been filled 100%. See this gap, it has been filled over here around this area. Same logic here, it has closed this gap, it has been filled here. You will start to look for buy again while the body will close above this area. You will start to look for buy again. You can go for that actually, because I have showed that to my live streaming. It's not really important to go every on, because whatever it happened the same thing. But I would love to go for the conclusion, not exactly to the conclusion, but here I would love to say, so what was my expectation around this area? Market will trade the upper gap, and the last gap is going to be untouched. Then market do another same kind of situation. Upper gap will be traded, this will be untouched. Finally market closed this gap as well. Here the same setup, same thing happened here. Finally market has built another upper gap, should be untouched after 100% closing this gap. So I'm now focusing over here. Do I have around these areas anything over there? If I can find something over there, okay? So I'm going to use that area by using the replay mode, and let me actually show that area. Okay, actually let me go over there a bit faster. Let me go over there. uh Let me close it and replay, start new. This is that area, okay? So remember the same logic I used here, I'm going to use the same logic here. It is going to trade this gap. If it close this gap, I will wait to body close above this gap, then I will start to look for buy again. But as the market never came to this area, so I'm not interested to mark it as in my order block, okay? Look what happened over here around this area. If you see around here, okay, so if you see, this is the lowest down close body close candle, all of these candles. Now can I mark this one as my order block? No. Can I mark this one as my order block? No. Can I mark this one as my order? Yes sir. You can now mark this candle as your order block. Why? Because this candle has closed above the high of this 15-minute gap. This candle didn't close above the line, this candle didn't close, so I can't use any of these two candle as my order block. I have to use this candle as my order block. So now this is a valid order block. If the market come back again to this candle within five candle, I'm interested to take the buy. Stop loss is going to be to take below this area, and same logic, I have to take some partial around 24 handle, 1:1, wherever it is going to be, and then I will take the I mean hold the trade as long as as I want, okay? So let's count how many candles it takes to come to this line, okay? This candle has validated this as an order block. One, two, three, four, five. See, five candle. No, it's not a valid entry anymore. Why? Because it's not an immediate reaction. As it is not an immediate reaction, I'm not interested to mark this, sorry, to take my entry from this consecutive order block anymore. So my opportunity is gone? Absolutely not. Now you will look for this low. It should not be taken. If market failed to clear this low, at the same time give you another opportunity to take your entry from the order block, you will take that order block entry, okay? So let's see what happened. So finally market actually a bit consolidated over here, a bit, okay. So I went a bit higher. Let me actually remove this one. This is the low, right? Did it take this low? No. That is the candle. Look at this candle. Where did it close? I'm going to keep it on my left. Remember, I didn't get my opportunity from this order block, unfortunately. So what I'm going to do, I'm going to see where the market has closed. This high is valid as an order block. This high is valid as an order block. So I can use this three candle as my consecutive order block. So even if the body close above this candle, I'm good to go to take the buy from this order block. Why? Because this high and the 50-minute bullish parallel gap high are the same high. Now look for this high as well, because where the body has closed. Look where the body has closed. 1, 2, 3, 4. I have to use this 4 consecutive candle as my order block. The body has closed above this consecutive candle. Failed to clear the real order block low. What is that? Order block, man. Come on. The within 5 candle, if it come to this order block, I'm interested to take this order block. Stop loss is going to be 2 tick below this candle, or the lowest down close body close candle, and we'll go for the same 1:1. But here I would love to take the partial around 20 handle, because that is the best area for me to clear the to clear the partial, and then we'll hold the trade as long as you want. There is, if there is any buy side liquidity, you can see here this is clean highs over here, so I can use this as my buy side liquidity over here. Okay, so here that is the clean highs. Now look what happened. The next candle has given you the entry. It tapped to this order block. You are already in the market, and you took the partial, at least 20 handle partial. You can hold your trade until here. If it provide you the boom, you will go for that. That is your boom. See, order block. Now, is there bearish order block? Maybe there is a bearish order block. Is there a bearish order block? Maybe there is a bearish order block. I don't care. I don't care, man. It worked perfectly. I don't care, man. This candle has closed below this candle. The next candle trade that candle. Maybe this is an order block. That candle, this candle has closed below this consecutive candle. Then it has traded this consecutive bearish order block. Then fall market. A lot of run. I don't care. I'm bullish. You have to have the context behind marking some kind of PDR. Always remember that. Okay. So I'm going back to 15-minute chart. And if I actually keep going like this way, you will be astonished, because every single place it works so beautifully everywhere. But I'm interested to show you the last day actually over here, to talk about this. Okay. So here, excuse me, this is the fair value gap actually over here. And you can see this is that area. I'm going to use it as a replay mode, start new, and over here. Okay, over here. So look over here what happened to that specific area, more importantly to that specific leg over here. This is a leg from the 15-minute chart, and if you see there is a gap from 15-minute chart. I'm going to mark this gap. What is my bias? My bias is bullish until that lines. Remember, remember this line and that minus 2.5 standard deviation. Until that, I'm bullish. I'm not interested to look for bearish run. So there is a 50-minute bullish fair value gap, as well as we had some kind of new week opening gap over here as well, which is also an fair value gap. We count it as a fair value gap. Okay, that is another matter. We'll talk about that next day. So this is that gap where market came. So I'm going to go back to 1-minute chart. What happened when it came to this gap? Look, okay, what happened? So market went a bit higher, didn't close above that candle. Okay, it didn't close above that candle, and then this candle has closed above this consecutive candle. Extend, mark that line, extend it to your right. Can you see where did it close? What is your bias? Bullish. Buy side liquidity here, buy side liquidity there. You have the 50-minute last fair value gap over here. 50-minute last fair value gap. I'm going to mark only this buy side liquidity, just this buy side liquidity. Okay, relatively equal highs. So I'm going to mark it this buy side liquidity. This is that order block. These two down close body close candle which has traded that 50-minute last fair value gap. You are looking for the buy after the open. This candle has closed above this order block. What you are going to do over now? Over there, you are going to put a limit order. Stop loss is below that candle, lowest down close body close candle, just below that candle. Why these two candle? because this is the candle which has closed above these two candle. That is why I have to take my entry from there. So you have to take some partial around 1 is to 1, which is kind of 20 handles. So I'm going to make it until here 1 is to 1. And then finally we have the buy side liquidity. So I can keep it until this buy side liquidity. Or if you want to hold it until here because later this market reads over there, it's up to you. All I need to see, can it tap to this order block? Look, body has closed above this consecutive candle. No confusion. Can it tap over there? Uh, okay, actually it did. Look over here. This candle open, tap to the order block, started to go higher. Remember the partial level, 20 handle partial, wherever it is 20 handle partial. So then it is actually a bit consolidation and finally boom, you got your boom. You can hold it until this buy side liquidity after clearing the partial. You can hold it until this last parabolic gap if you want. I have no problem with that. But remember, partial is must. What did you see over here? A beauty of order block. Now, here is an order block which has traded a gap or the last fair value gap. This is an order block, bearish order block. I don't care about that. Maybe there is a bearish order block. I don't care about that. It have worked 100%. I don't care, man. I'm bullish. So I will only look for the bullish setup. No bearish setup. Only bullish setup because my bias is bullish. Maybe your bias is bearish. Now, how can I know about that bias? Brother, you have to join my live actually. Because otherwise you can't watch a single video to learn about bias. Bullshit. It's not possible. You have to practice to look for your bias. This is how you will actually practice your bias. You have to practice it with someone who knows how to mark the bias or how to identify the bias. I'm not talking about myself. You can watch anyone you want, but they have to know how to look for the bias. Otherwise, you won't never be able to look for the bias. I mean, you won't be able to mark your bias by watching some videos. It's not possible actually. That is the water block, right? The beauty of the water block. Now we actually talk about another water block. Here I'm going to go for the 1 minute chart now. Okay. So here we have some kind of market structure shift around this area. We have the market structure shift. That is the market structure shift. Entry fair value gap so far and the last fair value gap from 1 minute chart. Now I'm going to show you the entry fair value gap and the last fair value gap area. Okay. So this is the entry fair value gap, last fair value gap from the same time frame. This is 15-minute gap, 1 minute order block. Look what happened. This market fall, actually it came to this gap. Okay, it came to this gap. Okay, after coming to this gap, it has built the order block. This is the order block. Extend it to your right. This is from the same time frame. Now if you really would love to watch or learn this order block, I have already two video actually inside the study folder, which is actually from the same time frame. Okay, same time frame order block from the depending on 22 YT model. Here market has cleared the sell side liquidity, market structure shift, entry fair value gap, the lowest down close body close candle is going to be my order block, which is one of the best order block. If you would love to learn this one, please watch the video I have made and you will get it inside the study folder inside the playlist to our YouTube channel. Okay, so that is the order block. What I'm going to do, I'm going to take the entry over here. Stop loss what should be two tick below this order block. What is going to be the target? This is going to be the target, which is the last fair value gap at least after clearing some partial. We had a medium impact news around here. We had a medium impact news actually. So I told that please don't just put it two tick below this order block. Instead of that, just close the anti fair value gap constant endorsement because news can send the market a bit lower. It is possible if there is news. So you can take this entry from this order block, which is one of the best order block, but you have to be careful about the news where we had a medium impact news exactly around 10 a.m. So this is the 10 a.m. area. Okay, so let's see what happened actually. You got the entry, immediate reaction, right? Within two candle you got the entry. This should be your target after clearing the partial around 21 handle. So wherever is 21 handle, here is the partial. And what happened? Look, see, market fall a bit and then finally boom, you got your boom over here. It came to the last fair value gap, right? Wow, so beautiful. Guys, I know that this video is going to be a bit longer. I don't have any other opportunity. I have to finish this by one video so that later it can be a masterpiece. Until now, if you have watched successfully, you have watched and still you don't have any doubt, please write down boom on the comment box. Okay, it's a request from me, from my heart, from my viewers, from my everyone. So if you are watching until here, make sure that you have write down boom over there, to the comment box. Please do that. Okay, and of course, if you have any question, let me know that as well to the comment box. So here, let's go for the finishing. Okay, it will take maybe a bit more time. Finally, this is that 15-minute last parabolic below this all-time high or the last the buy side liquidity. Now here, if it ever trade the last parabolic gap and start to respect the last parabolic gap, there is an opportunity to get the reaction. I don't know that it will keep falling. I don't know that it will keep going higher. If it would love to go through the last parabolic gap, it has to show me the speed. Look at this candle. Look at this candle. See this type of candle? It has to go through this type of gap or the last gap by this type of candle. Otherwise, I'm expecting some kind of reaction. Here I have something else. What do I have? Look at this low and that low. I'm going to remove this 15-minute last parallel 15-minute gap actually. So instead of that gap, I'm going to mark this low and that low. This is the clean lows. It is called clean lows. What do I mean by the clean lows? Let me talk about that clean lows. When I will hover up my cursor here, you will look over here to this low. Okay, over here. Look, what is the low? It's 24,846.50. Okay, see here 24,846.50. Now, if I come here, look at the same area 24,846.50. That means tick by tick, it is clean lows. I don't like to see this type of clean lows on the market. So while this market came here to this 15-minute last parabolic up, what is my bias? Bullish. If it can go through this with speed, okay, of course I have to look for the buy. But if it starts to respect the 15-minute last parabolic gap, this is from the 15-minute chart, there is no other gap above this gap. It is called the last parabolic gap. As well as I have the clean lows over there. What should I think? Wow, maybe there is a possibility this market will fall and clear this sell side liquidity. Now I'm coming in 1-minute chart. Look at the highest up close body close candle, right? This is your highest up close body close candle. What is that? Order block. Market. What is that order block called? Bearish order block. Logic. It came to this 15-minute last parabolic gap. It is respecting the 15-minute last parabolic gap. I didn't get any speed toward that liquidity. I have seen that it left that clean lows over there. So I'm now interested to look for that clean sell side liquidity. I'm not interested to look for any kind of buy until it's not broken or it's not leaving that area too far. It's not coming too far. I'm not interested to look for any kind of buy anymore. So let's see if it can make this as an order block. Look at that candle. Where did it close? Below this candle. What is that? Order block. Entry from this order block within 5 candle, remember. Stop loss 2 tick above this order block. Target this sell side liquidity after clearing the partial around 1:1. So I'm going to just keep it here and we'll see that. Okay. So the very next candle has given, oh no, it didn't give you the entry. The next candle didn't give you the entry. But that candle has given you the entry. And it came here to this gap, respected from there. What should you look for? The same logic. Did it close above this line? Did it close above that line? Why? This is the order block, remember? Without closing or going above this line, can it make another order block, bearish order block? Let's see. So finally, this candle, look at that candle. It's not my order block. Why? Small body, long wick. So this is gonna be the consecutive order block. Mark it, extend it to your right. If the body close below this line, then I'm going to get my order block. Okay. So here, look at that candle. Where did it close? Below this consecutive order block. Entry from the same order block. Stop loss 2 tick above that order block. Just 2 tick above that consecutive order block. Target, of course, 1:1 and then wherever you would love to target. Okay. Let me put it until here just for the sake of this conversation. That candle, you are already in this trade because you put the limit order after closing below this order block. So to that specific candle, you are already in this trade. And okay, it takes a bit long time. Finally, you got your boom. Not only here, but also it actually fall for this sell side liquidity for later and clear this sell side liquidity. Guys, I had a lot to tell. Actually, I had a lot to explain around here. Actually, specifically around here. I'm just not able to talk, but I hope that until now, whatever you have seen here, you will be able to notice, or you will be able to actually, let us say it has actually cleared that clean lows here, that is has been clean over here. By the way, whatever I was saying here, I was interested to explain a lot, but as the video is already much longer, I think people will get bored, so I don't want to extend it much more. You guys can, I don't know, if you are watching after 2 years, you won't be able to see this price action, but those people right now watching this, please try to find out how can you mark the best water block around this area to find the beauty of this water block, or this is the beauty, man. Come on. Now, one thing before closing my stream, don't ever think that this is unbeatable. You will never get the losing trade. Don't ever think like that way. Losing can happen anytime. So it's not kind of unbeatable. But 90% of the time, the way Tit Wizard keeps saying, you will get your boom, brother. 90% of the time. So be happy. Learn the word block. This is the beauty of the word block. I believe that you guys will be fascinated, okay, after watching this video, because Chitu has revealed the beauty of the word block. Until the next video, cheers, guys.